Hey, what's going on, everybody? Hey, welcome back to another video lesson. I got a really great video for you guys. It was about a week ago on 11/8, I did a class in my Options Elite live coaching, and it got such great feedback. What I wanted to do was share it with you guys, okay? So it is packed with information. In the beginning, we talk a lot about market posture, permission, how do I decide what I'm going to trade every day, all right? And then we're going to dive into a concept that not a lot of people are talking about, okay? I find very few talking about this at all, about the market phases. And it might get you to look at things in a way that you never have before, okay? So, number one, if that sounds good to you, hey, subscribe to the channel if you haven't done so yet. 2, hit that little bell to be notified whenever I shoot a brand new video. And 3, hey, make a nice comment. I'd really appreciate it. It doesn't cost you anything and it helps support the channel. All right, so let's go ahead and roll that beautiful intro. All right, everybody. Hey, welcome back to another video. Like I said, now again, like I talked to you about in the beginning, this is packed. I highly encourage you to get a piece of paper, get a pen, turn off your cell phones, and dive right in. Okay, so a lot of you know that I have an Options Elite Master course. And then for anybody that gets the Master course, they have an opportunity to get the live trading that goes with it. So what you're about to see is part of a live training class that went on, I think it was about a week and a half ago. But I'm going to be posting a couple more throughout this week that go with this. So this is kind of like part 1, but it is super good. And you're going to be, if you watch it to the end, you will see things a lot differently. I can promise you that. Now, if you like the indicator that I'm using in the beginning, I've got a special going on right now that I haven't told anybody. In the month of November, if you sign up for my Options Elite Master course, you will get that indicator for free. Completely for free. This is a brand new promotion that I'm launching here in November. You will get it for free. You can also check down below if you just want information on the indicator itself. But if you get my Options Elite Master course, I'm going to give you that indicator for free. All right, and then if you want information on the live coaching, you can find out after that, all right? So sit back and enjoy this Options Elite Masterclass live coaching. Here is the way that I do it, okay? So there's futures trading, which we know we got the futures room, right, with Charles. Great class on Friday. Great set of rules. Takes practice. Practice it in paper money, I would say, and I'm sure Charles would agree with you. Get good at it in paper money before you start attacking it in your real money, right? Any new strategy that you're trying to learn, it's better off to go practice it in paper money. So we, oh, Rafa, yeah, it's going to be too hard for me to trade while I'm doing this. So that's cool. Y'all keep rocking. So options. Now, the way that I do it, and I'm going to go back in the membership area, and I'm really going to drive these points home, and I'm going to clean things up and make it a little bit more kind of on the money. But there is setups and strategies. They're two different things. Okay, we have bullish setups and bearish setups. I highly encourage you to really incorporate both into your plan. I do that, and it just really helps, right? When the market's down big, you don't have all these bullish trades getting killed. Your bearish trades are at least helping out. So I trade bull flag setups and I trade bullish squeeze setups. I trade bear flag setups and bear squeeze setups as a setup. Now, the strategy is you can buy a call, you can buy a put, you can do a debit vertical spread. So Pat, if it's really expensive, go do a spread, right? Spread will neutralize that. Debit vertical spread or credit spread. It's up to you what you do. There is no right or wrong answer. Right? You've got to just trade whatever it's going to be the easiest for your lifestyle. But one of the things that I do is I let this Forecast Pro tell me what I need to do every day. Okay. And the way that I look at it is the green line is for trend trades, intermediate trades. When the green line, now, my mentor, if the green line was headed up, he had permission. Or if it was in the upper zone, he had permission. If it was heading down or in the lower zone, he did not have the permission. And he would always say, what if you avoided trades? Just this one little thing alone. He would always tell us, what if you avoided taking trades when that line was pointing down? How much more would your portfolio have? So if you're an intermediate trader, okay, if you're an intermediate trader, that one rule could be huge. Could be. Now, me, I like to see it above the 50 and going up or in the upper zone. So if I'm going to trade a trend trade, and again, if I'm going to need to see permission, that's just me, right? Somebody, what they also might do is they might say, well, if we're up on the intermediate, then I've got permission to trade short-term trades to the upside. And there's a lot of ways. I'm going to do videos giving people different ways to look at it. That's all I'm here to do, is to help you think. So the blue line, I got some good stuff to talk about. Don't worry, guys. The blue line. The blue line is my short-term trades. Bull flags, bear flags, squeeze setups. Bam. So the blue line tells me what I do. So even if you're going to be a call option buyer, one of the things that might help you, maybe, I mean, I don't know, you got to test it out, is pay attention to where the blue line's at. When the blue line is in this lower zone, for example, we're extended, right? There's likely going to be a snap back. Okay? Likely going to be a snap back. I mean, you can go look at it, right? So the way I do it is, when this midline is a very important point. When this blue line is crossing the midline and angled down, hey Glenn, and angled down, I got some really cool stuff to talk about, the guys. Like, don't worry, oh my God. Then I like to look for bearish trades on the daily time frame. So that's when I'm gonna, and again, this is hard, man, guys. We've been going straight up. That's why some of those bear call spreads are losing, because the market is just grinding. But that's what I do. When the angle, whenever it's above the 50 and going up, I'm sorry, I messed up. When it's here going down, I like to do bull put spreads. I'm sorry. Sorry. Here, I'm looking at chats and everything. Here going down, I like to look at bullish trades. Bull flags, squeezes. So if you guys trade squeeze trades, which a lot of you do, I think if you just personally implement that one little thing, it's going to make a big difference. Big difference. The orange line, when the orange line is in the lower zone, I look for bull put spreads on the 30-minute time frame. And when it's up here, I look for bear call spreads. So I have two time frames that I focus on: the daily and the 30-minute. And that's it. And that's what I do. So like if I looked at it right now, the blue line is out of the zone. I don't have permission right now to trade any strategy on the daily time frame. Nothing. The orange line is where? Where's the orange line? So if you have this Forecast Pro, you can go to Studies, Edit, Forecast Pro. You can go Show Information. I don't know why that didn't check. And we are falling, but we're still above the 20. So I have no permission to trade nothing right now. If throughout the day this orange line slips into the lower zone, I'll trade. But this has been working. Like I'm telling you, it's been working really good. Now my mentor, Dave and Scott, preferably them, they never had filters on the short-term trades. Their philosophy was see the setup, place the trade. Regardless of what the market's doing, go look for bull flags and bear flags. I'm not doing that. Because going back and analyzing all my results, I don't like to take 7 or 8 or 9, 10 losses in a row, which sometimes will happen. Because if you go enter a bunch of bullish trades and the market rolls over, you're going to probably lose on all those. I don't like that. So I like having this filter, and that's how I'm going to stick to it. So just this little filter alone, if you would wait, even if you waited till the blue was down here and then you started trading squeeze trades, your results are going to they're going to be better, man. I know it because it's happening with me. So today, right now I'm looking for nothing. So I'm going to go play golf. No, I'm just kidding. I'm not going to go play golf. But why not? I'm going to do futures trading, which is what I'm going to talk about something next. So hopefully, Patrick, I answered your question 1 on the options as far as price. I tried to explain it the best I could. Scans and that. As far as closing positions, I think I explained it. If not, don't worry, my man. Reach out to me, brother. And posture permission. What I'm going to trade. It makes a difference. And I have scans, thanks to Alex and thanks to Jason. I give myself no credit. That help me look for trades depending on what I have permission for. And then I just leave those trades up and I pop in trades all day. Bam, bam, bam. No mercy. As you guys know, I like to do credit spreads. Credit spreads to me are money in the bank. I don't personally like call options anymore, and I personally don't like put options. I like credit spreads. And it's not that you can't make money, it's just I'm a base hit and a doubles hitter. I don't need to go out there and hit home runs. I'm trading other stuff. I don't need to get my kicks and my thrills with a call option when I can go trade, a cryptocurrency and, like I said, might grow, what the account raw for 30,000 in like a couple weeks. I don't need to. I'm cool with credit spreads. And ever since I've shifted that primary focus to getting back to spread trading with these guidelines, the account has been just doing this. It's been going up, man. Going up. We went down and we had a big drawdown, like 7K plus, because we were experimenting with all these different time frames. I was trading futures, but I was trading like a maniac. I had trades on, 10-minute, 20-minute, and it was too hard for me to manage. And I did really bad in my management because I forgot what trades I had on. I forgot what time frames I was in. And so before you know it, I'd be down 80 or 90% when I should have got out at like 30. So that basically woke me up really quick to just go back to what I do. Now, one of the things that I like to do is, since I'm a spread trader, this is going to go into exactly what I'm going to talk about now. I'm going to start to introduce some stuff that might freak you guys out. It's freaking me out. But we're good on the spreads. Now, I don't just sell spreads on anything. I'm utilizing the Squeeze Pro, okay? This is very important to me. The market has 3 phases. Just so you know, I'm revamping so much stuff. And my primary mission is to really understand these 3 phases, and I'm getting really good at it. And supply and demand zones, okay? And I've got lots of stuff coming. I can promise you this, for the month of November, it's going to be pretty exciting. I'm going to throw some stuff out that are going to get you to really think about the way you look at stuff. Because I don't stop studying. Every morning I wake up at 5 o'clock, and that includes Saturday. I've been not doing it on Sunday, but every day through Saturday. And I study. I'm trying to get better. Now, the market has 3 phases. I've got lots of wonderful stuff to talk about here. Okay? Now, just hear me out for this, okay? And again, obviously, if you have any questions, ask them, no problem. But I promise you this, the concepts that I'm going to be talking about are, oh my gosh, they're so good. And if you have any questions on the spreads, just let me know, right? I sent you the rules, Patrick.
I'm going to be adding, you know, again, a lot of good stuff in there. The rules and the credit spreads are just, they're just money. I'm telling you right now, they're boring. They're boring, but they win, right? They're not as fun as buying calls. They're not as fun as buying puts, but they win. Okay. Now let's talk about this concept. We're going to start diving really deep into this, and I'm going to go to levels. I'm going to be presenting PowerPoints. I'm building an entire library of stuff to share with you guys. Because one of the good things is I never stop studying. I constantly pay money for education because I'm trying to get better. And the good news is if I go out there and pay $2,500, $5,000 for some educational program because I don't know it or I want to improve in it, I'm going to share it with y'all for free. So everything I'm going to be sharing with you over the next probably forever, well, not forever, but several months, it's information that I've paid lots of money for that I'm currently going through stuff because I'm trying to get better with these concepts, and I'm going to give you it to you for free. Just keep coming back, and I promise you it is. You're going to look at things like you never looked at things before because nobody's talking about it on the internet. All right, here we go. The market has three phases, okay? And understanding these three phases is going to be very important. Right? Very, very important. And we have this phase right here, the contraction phase. I'm going to talk a little bit about the contraction phase today. And I'm going to share with you some of the stuff. And I'm going to pull up the United States Canadian dollar because I'm going to show you something really cool that I noticed on Friday that is just really mind-blowing to me. Now, contraction phase is the setup caused by low institutional volume. Okay, so it's the market makers doing two-way business, right? Market makers are making money on the spread, and they're just matching buyers with sellers, right? And it's sideways. So the contraction phase, you always want to look at that as the setup of the market. It's getting ready for its next move. And you guys know it by the squeeze, right? When you see the squeeze, it's telling you that it's a period of low volatility. Low volatility. It's becoming very quiet. This is where a lot of retail traders enter into the trade, aka that's what I was doing as well. That's what John Carter teaches. Total 50-50. Total 50-50. And I would say it's less. And the reason why it's less is the reality is lots of times it will go in the direction that you want it to go, but it'll go the other way first. And I'm going to show you some cool shit. The other way first, and it'll stop you out. So it's 50-50 if you buy the option and you just hold it. I can tell you this. If you go in there and you buy an option inside the squeeze, the contraction phase, and let's say you buy the option and it's $2.50, and you position size on maximum gain, maximum loss, which is $250, and you do no adjustment, none, which means you're willing to lose all 100% or you're going to hit your price target, and you did no adjustment, you're going to probably be 50-50. Yep. Now, your people are less because when it goes against them, they get stopped out. But if you just literally did nothing, I have a friend, his name is Blake Young. That's how he trend traded options. He entered into a trend trade. He position size on maximum loss, and he never exited. Ever. Like buying a stock, but buying a long-term option. Now, he didn't do a leap. It was like 150 days, but that's it. He was prepared to lose it all. And then he rolled his winners. So anyway, but this is tough. This is gambling, to be honest with you. It is. Now, I know we're all taught, and again, I learned probably from the same people y'all learn from. The trend is up. Get in the squeeze, and there's a 60 to 70% probability it's going to fire to the upside. Yeah, that's not really how it works. That's how it works in like a make-believe world. Don't work like that. Anybody's trading a squeeze knows that crap. Or maybe it does, but you got to be willing to get stopped out first, right? So anyway, this phase is tough, the contraction phase. So I like to do spreads when we're coming out of, you'll see in a minute, phase 3. Okay, so after phase 2, we come into the expansion phase. We got expansion legs. Right, we have a multi-leg. I'm going to be talking about some concept called it's a pattern. It's called the multi-leg expansion pattern. I'm not going to talk about that today, but it's a multi-leg expansion pattern. When we come out of the squeeze, we're in the expansion phase. Range starts opening up, taking out highs and lows. Smart money accumulates positions at discounted prices. I want you to think of something for a minute like a store. I don't know if you guys own a store, but I want you to think for a minute you have a store and you need inventory. You have inventory, right? How do you make money? How do you make money? You're going to have to accumulate inventory at a discount and then sell it to the retail people for higher. That there is no ifs, ands, or buts about it. You want to make money in the market. If you're bullish, you've got to buy it at a discount and sell it for a higher price. Like, that's it. And vice versa when you're going down. So I want you to think of your stock trade as a retail store, right? Smart money accumulates inventory at discounted prices, sells it back to the retail people at a higher price. And that's how the cycle works. And their accumulation phase is the expansion phase, which is where most of the retail people get chopped up. Okay? But don't worry, I've got so much coming over the next month and a half. I'm going to be breaking out new PowerPoints, which I've never seen before. And I'm actually going to go in detail because I want to have a section in the membership that really talks about the 3 phases. This is fascinating. Now that goes into the trending phase. This is the payout cycle. Okay? And this happens with all time frames. And this is what it is. The people I'm learning from are institutional traders. Okay, so like it is what it is. This is a fact. Okay, institutions start taking profits. The market makes its move to higher or lower prices. Institutional traders use fear of missing out, inspired liquidity to exit their position. Right? They accumulate a discount, they dump it at higher prices. That's the cycle. And then after phase 3, it goes right back into phase 1 and it starts all over again. So what I'm trying to do with my spreads, which is why I believe I have even an extra advantage other than the probabilities by itself, is I'm catching it when it's leaving phase 3 and entering phase 1. Because sometimes phase 1 can last for a long time, right? How many times you got in a squeeze and that sucker lasted forever? So when I get into a spread, number one, it has to be in a squeeze. Has to. I'm not going to take a bear flag setup, squeeze setup. Well, I mean, it's a squeeze, that's my name. But the bear flag, unless it's in a squeeze. Because my advantage is it's about to go into a consolidation period. I got to see it on the chart. Now, I prefer it to be early into the squeeze. Black dots, right? That's why it's called green to black, right? When this is trending, it's green. When we leave from green, we go to black. That's why I call it green. That's why my strategy is called green to black. Now, the deeper it goes into the move, it goes from green to black to red. And it could stay red for a while. The deeper you are into the squeeze, the longer you are already in the contraction phase. Remember, when it leaves the contraction phase, it goes to the expansion. And we don't know which direction the squeeze is going to fire. It's 50-50. We hope it fires in the direction of 10, but we don't know crap. So I want to take advantage of the sideways chop. So the longer it's in a squeeze, again, we run more of a risk of losing, right? Now, we're still going to go in there with a probability of 65% or higher. So no matter what, we're already 65% chance of winning. And the probabilities in the option chain have nothing to do with the squeeze. So that's why, we've been able to squeeze out around 80%, right? Probably going to roughly be about 75 after these next runs, which still 75%. Come on. It's pretty good. So that's why I like doing the spreads. And that's why I've been winning, because of this philosophy. I didn't even know it was this philosophy until, I was already doing it green to black. But then whenever I learn these market phases, I'm like, oh my gosh, that really makes sense. So these three phases complete one market cycle. Don't worry, I'm going to show you something because, again, I'm going to talk about some such cool stuff. At any current price, it can be classified in one of the three phases. They can be seen on every time frame from the 1 minute to the monthly. Your effectiveness as a trader depends on your ability to recognize which of the three phases you're in and then interact appropriately. Well, when we're in a squeeze, we know we're in phase one. When it leaves the squeeze, we know we're automatically in the expansion phase. The problem is sometimes that expansion phase can last a very long time. Don't worry about that stuff. We got this. I promise you that. So anyway, that's that. Now, let's go look at this right here. Well, don't worry about how they're formed because we're not going to just squeeze. 2. Okay. Okay. So what I like to do is, let me show you my chart real quick. And I'm going to look at this US CAD because this is freaking amazing, but I don't want to show you this yet because this might freak you out. But anyway, what I do is when I notice a squeeze, it doesn't matter, ES, crypto, it doesn't matter. Okay. What I like to do is this tells me to go look at the chart. Now, this is where it'll be a little bit different for everybody. What we are trying to do is just once we notice there's a squeeze, you go look at the chart and you draw a box around whatever you think that the consolidation period is. Okay. So this right now is my consolidation. We're setting up on the 1 hour. Okay. So that's all I do is I go look for, let's go to the ES, right? ES, chopping around. So we're in a squeeze. So I notice that this is pretty much choppy. Okay. So I just drew a box, right? This is the 5 minute. But the bottom line is when I see a squeeze, I know we're in the contraction phase and I draw a box. Okay. And this is the starting point of the next big move. This is where market makers do two-way business, right? There's buying demand zones, which we talk about, which I'm learning extensively as well, and supply zones, right? Selling demand. And they collect the spread and they're just matching buyers with sellers, right? They're doing two-way business. They collect low-risk spreads in this area. The market maker can use this time to assess current overall supply and demand and plan what's about to happen. Okay? Talked about I got some good stuff. Okay. Why are they important? They help define your expectation of the upcoming market behavior. They serve as an advanced volatility signal, which we know because we got the squeeze. They provide you with market makers' starting accumulation point for their book of business. This is the setup of the market. They're the basic building blocks of all of the framework that I'm going to be talking about. Okay. Now, one of the things, and let's go to the ES for a minute. Now, let's go to the United States Canadian dollar. I just want to share with you. Because one of the things, and again, I'm going to be building an entire library of stuff on this, don't worry. And I can promise you, I'm going to explain it really good. But what you want to do is have a bigger time frame for your bias. And this is the United States Canadian dollar, but this applies for everything. I'm going to show you something that's pretty amazing. This works for stocks and everything. So you want to have a bigger time frame that gives you a bias. I want you to think of it like, well, let me get this. There's only two phases, okay? Or like, I'm going to give you some strategies as we go, but there's two things. Either the market is ranging or the market is trending. That's it. That's it. It's either ranging or trending. That's it. And depending on if the market is ranging, you're going to trade a certain way. Now, I'm not talking about spreads. They're gone for a minute. Now I'm talking more about, even different ways that you can look at futures, right? Charles is teaching a way on a smaller time frame. Money. I'm going to show you something that you might be able to incorporate on even a bigger time frame, right? Ranging and trending. So when I look at the daily time frame, and again, just think of this as Google, market, whatever. It's daily. So I have to say to myself, are we ranging or are we trending? Now, my last box is right here. As you can see, we were in this squeeze. So another thing that I decided was just because we're in a squeeze doesn't automatically mean it's ranging. Because what I'm noticing is, remember, the people I'm learning from, they don't even use the squeeze. We're in a squeeze right now. Does it look like it's ranging? It's going up. Okay? This is ranging. So when I see a squeeze, I'm going to examine it. And if it's sideways chop, I'm going to draw a box. Okay? And then this line in the middle is the single most important line. And I'm going to show you in a minute. It's the single most important line with an institution. Because here's the thing. The people that I'm learning from, what they're trying to do in this philosophy is what they're trying to do is get retail traders to trade like institutions. They were institutional traders. So they know exactly how institutions do it. So what they're trying to do is get the retail trader to think like an institution, not a retail trader. And the entire methodology that I'm going to be teaching and going through is built with that concept. And this applies for crypto and stuff as well, don't you worry. It's to get you to stop thinking like a retail person and start thinking like an institution. Because that's what this whole methodology is about. So this middle line is called the value line. Whenever you get a box, whatever box you draw, and again, one time frame, your first goal, have a big time frame. And then, are we trending or are we ranging? And there's strategies for both. I'm going to show you one called walking up the ladder in a minute that might just start to freak you out. Freak me out. But you draw your line in the middle. When we're underneath, okay, this is the tipping point of belief. When you're underneath, then your bias is bearish. When you're above, your bias is bullish. Now, if you're beginning, one of the things that you can do is you can say, okay, remember, this is the contraction phase. It left. We know it's in the expansion phase. This expansion phase could go on a while. But here's the thing. Right now, we're underneath this line. So you could say you are only going to trade bearishly. And right now, we're trending. So I'm going to show you a strategy that would work. But that's not the way I'm going to do it. Because this could work its way all the way back up to here, and that's, you can make a lot of money. So I'm just going to say to myself, number one is we're not going sideways, so we're trending. And as of right now, we're trending up. Yeah, the overall trend is down. I get it, but we're trending up. This is the daily time frame. So that's the first thing I want to do is I want to tell myself, okay, we're trending, going up. Now, if this forms a couple candles in the middle, then we'll start to consolidate. And then it's a whole different strategy. But I'm going to show you something really cool. And you might just, boom, kind of have a BGO. So we're going up. That's it. That's all I want to know. Now, I have Heikin-Ashi. I went back to the Heikin-Ashi. I'm not trading off the daily. I'm only using the daily for a bias. And you can do this on the ES as well. Get a longer time frame. So once you have a bias, it's trending. I'm up. Now what I'm going to do is I'm going to utilize the smaller time frame. I'm going to show you this hourly. Because I want you to think, and again, I'm going to build an entire thing on this. I'm just kind of introducing you to what's coming because this is Fascinating what I'm going to show you. On the smaller time, think about the store. If you own a retail store and you're building up inventory, you're accumulating inventory at discounted prices and you're selling it back at a higher price. So if my bias on the United States Canadian dollar right now is up, and it's going to be up until it shifts to ranging. So if we get like a big red candle here in the squeeze, then I'll probably say we're now ranging. But right now, it's up. It's white, right? And you can get some big old candles in a row. So here's the deal. On a smaller time frame, let me introduce you to the money. So, man, okay. I'm going to introduce you into something that's going to be quite amazing. So these boxes represent the contraction phase. This line is the tipping point. So if I'm in an uptrend and I am going to build inventory, I am going to build inventory when it's below the dang line, not above the line. Because if I buy it above the line, I'm actually buying it more expensive. Remember, think like an institution. You guys are going to love this approach too as we get going. So I'm going to accumulate at discounted prices. So one of the things that I want you also in your brain is, I want you to start thinking like an institution, which means you're going to start accumulating a position. I don't want you to tell yourself, like we had this talk the other day about, I'm going to take a shot. And it's not about taking a shot. I'm going to start building a position. Doesn't John Carter do that too at the squeeze? He tells you he starts building his position. So I want you to think like that. Okay? And the way I'm thinking is going to help you because you're not going to feel like you have to nail the entry. Okay? You're just accumulating at discounted prices to sell back to the masses for more money. So when I get a squeeze, we're in a contraction phase, I draw the line. We go up, we get into a squeeze. As soon as it leaves, and now remember, everybody and their mother's trading the squeeze up. They all trade that breakout, they're happy, they get stopped out, then it goes up. This right here is why people get faked out. They never understand why they get faked out with a squeeze, but this is why. Okay? You can see this chart. This is a prime example. Okay, remember, every one of these boxes are squeezes. And you and I both know everybody's trading that to the upside. Because if they put the moving averages, I'm not using moving averages and all that crap. They put moving averages, you and I both know every one of them is trading it to the upside. And guess what? Now they might have won that one, maybe, if they took profit. But here we go. So I got a squeeze. So what I'm going to do is I'm going to identify the tightest range. And I'm going to draw my line. Now here you go. Any point between value and value, you can accumulate into your position. Thinking like an institution. It's not about nailing this to the pip of the point. It's about building a position, accumulating. So here's the deal. This line right here, this area or zone acts like a magnet. A magnet. Especially for this pair. What happens is, goes up, you don't care. Comes down. Anywhere in this zone, you can start building a position because you're building inventory at a discount. Now, the way that I'm going to be doing it is, I want it to come to as close as the value line as possible. My bias is up, so this is only why my bias is up. And I'm going to talk about, this is called walking up the ladder. Fascinating. So you get a divergence on the Forecast Pro. You could use supply and demand zones if you want. This was a demand area. And you can just lay into the position, right? How you say is start to build your inventory. It doesn't matter. You're not calling the bottom. And one thing I'm going to tell you is probably 8 times out of 10 when you start to leg in, because here, let's put all the cards on the table. You and I both have no clue, none, if that's the bottom. Yeah, we can look at our indicators, we can trade a bounce, but you and I don't move the market. We don't know if it's the bottom. And I'm too busy trying to pick the damn bottoms. With this approach, you don't have to. You don't care. All you're doing is saying, look, it's in a spot. I got a divergence. It's in my zone. I'm going to start accumulating my position. This line can serve as a place to manage your risk. You can set your stop loss, however many pips, however many points below the line. Because if it breaks through the line, it could shift and cause this to shift. Okay? So anywhere in here. So the way I'm going to do it is when I'm close to the line, I get a divergence, I'm going to start building a position. I'm going to accumulate inventory at discounted prices. And if it goes down a little bit more and does this and comes back and gives me another divergence, I'm going to accumulate more. And I'm going to accumulate more. I'm thinking like an institute. This is what they're trying to do, is they're telling you, don't think like a retail. Don't call tops and bottoms. Accumulate inventory at discounted prices and then sell back to them for more expensive. If your bias is up and the market is trending, this approach, walking up the ladder, it's unreal. Unreal. Now, what you could do is when it breaks back through the line and you get a divergence, you could just sell if you want. Sell it back to them, right? Just like we said, think about the phases. Phase 1, phase 2, fake them out, bam. Phase 3, okay? Doesn't matter. But your bottom line is when you get a divergence, you cross the line, you can move your stop and you can manage your risk underneath that line. Because it could keep going up for a while. But if it goes into another squeeze, just get out. Get out, reset, or do nothing. You're in profit because you started to build your position down here. And looky, another squeeze. Boom, everybody got suckered. What did it do? Everybody got stopped out. What did it do? Came right back down to value. Got a divergence. You now accumulate your position. You have a store. You're accumulating inventory, which is the price, at a discount. Because all the retail people, they're too busy about calling tops and bottoms. They're all getting stopped out here. But you're like, I'm not going to accumulate above value. I got to accumulate below value at discounted prices when my bias is up. When my bias goes sideways, there's a whole brand new strategy, which I'm still learning. And look at this. Went up again. Up, another squeeze. We're still in a squeeze. Drawing another box. So where the heck do you think I'm going to enter this trade? Oh, when it leaves the box. Exactly. I'm telling you right now. This is what I'm going to be teaching over the next several months is going to blow your mind, because I'm learning it and it's blowing my mind. Blowing my mind. I'm looking at everything differently now. It's like, oh my gosh, this is it. This is institutional trading from the mind of like a retailer. So this is a retail trading from the mind of an institution. Below value at discount, accumulating inventory and selling it back to the retail crowd. So now, as long as my bias is still up, on the daily, my bias is up because we got white candles. Yes, we're in a squeeze, but again, I'm not going to anymore just say, oh, we're in a squeeze, we're sideways. I got to see some consolidation. It's up. So what I'm waiting for is a break, maybe, which is what it's done every time, and pull back anywhere in this zone, I'm free to start building a position. You are going with the trend. The trend is up. But you are right. Some traders will say, well, as long as we're below value, I'm just going to wait until we get a red candle, and then I'm going to do what's called walking down the ladder. So again, this is more high level. But what they actually say from just a safer, more conservative way is if you're below value, then focus to the downside. When this candle shifts red, now I'm going to look for walking down the ladder. But as of right now, the way I'm playing it is, because guess what? Here's another thing I just noticed. Maybe I can draw a box in this area, but remember, I'm trying to utilize the squeeze, but they probably would have drawn a box right there because you can clearly see it's going sideways. But I'm utilizing the squeeze. That's something that it's going to keep me saying, look, when it's in a squeeze, I'm going to start to look. So as of right now, we're working our way up. And this could go all the way up to here. We don't know. You know, what I do know is this is the expansion phase. It could go all the way back up to here. Right? We're in the expansion phase. What's the expansion phase? Go back to what we talked about in the beginning. We're in this phase. But besides that, we're going up. Right now, we're trending. So I'm going to trade my trending strategy. My trending strategy is walking up the ladder. And I'm going to show you the ladder. And walking down the ladder. Absolutely, bro. I'm going to freak you out with this. I'm freaked out. And I am going to build an entire thing in the course because I've made it like this. Wow. This has really got me. Again, I'm going to continue to do my spreads because that's a whole different strategy, okay? That's a volatility play. Boom. We don't stop that. But check this out. So you got to ask yourself on the bigger time frame, and I use Heikin-Ashi because they're suggesting using Heikin-Ashi because it's less noisy. I'm not trading off the daily, just for bias. And are we trending or are we ranging? That's what you need to ask yourself. And as of right now, we're trending the way I see it. And we're trending to the upside. So check this out. We're in a squeeze. So what do you think I'm going to wait for, right? Boom. Here, give me a divergence. I'm going to accumulate a position. And if it goes down, I'll have a stop loss and I'll get out. Because if that happens, this might shift. Because eventually it's going to end. So now let me talk about this ladder. Walking up the ladder. Because here's what matters. And this is what blew my mind. We're too busy focused on price action. I want you to focus on price action. I want you to focus on the most important thing that they said, that the most important component of the entire methodology. It's that value line. The value line is your ladder. Doot, doot, doot. As long as the ladder is getting higher, it's called walking. The exact way they described it was walking up the ladder pattern and walking down the ladder. You see this ladder? So don't worry about price. That means nothing. What matters is I'm going to enter in this zone as long as we keep walking up the ladder. I'm going to accumulate, and I'm going to sell back. I'm going to build up an inventory, and I'm going to sell it back. As long as the ladder keeps getting higher. Not price, the ladder. So here, I'm going to be accumulating here. And if it breaks back through and the ladder continues to go up, then I'm going to do it. Because you know what? Eventually, the ladder is going to now switch, and we're going to walk down the ladder. And when that happens, this is going to turn red. And we're going to have a series of red. Or it's going to start going sideways, and it's a whole different strategy. This is for a trending bias. You look at the bigger time frame and you ask yourself, are we trending or are we ranging? If we're ranging, we're in the contraction phase. It's hard to make money in the contraction phase. But there is a strategy that you can actually trade with this methodology in that range. Or we say, look, I'm going to trade it. And you can do this for the ES, by the way, because these people do it too. They do it for crypto also. They're building inventory, but you got to think of price action like inventory. Now I can look at this US Canadian dollar and tell myself, well, if it comes down in this area, I get a divergence, I'm going to go ahead and add. I'm going to go ahead and accumulate. I don't have to call the bounce anymore. Institutions don't care about calling the bounce. That's a retail approach, right? They just build up a book of business at a discount. Institutional traders start taking profits, right? Accumulate, just like I said, sell back. Market moves higher and lower, they take profits. Simple as that. And an easy way for me is this walking up and down the ladder. So I can look at this and I can just say, okay, cool. So now, and again, this is what I'm also experimenting with. Now this is 5 minutes. 5 minutes might be too fast, but it happens on every time frame. So, and again, I'm just sharing you. Charles is teaching one philosophy, which I'm also paying very close attention to that in paper money because I'm learning. But in this particular case, this is the 4 hour. Same thing. Are we trending? Are we ranging? Well, we're trending. We're up. Okay. My last contraction phase is here. Yes, we're in a squeeze, but if I look at this right now, man, it's too hard. I mean, it's just choppy. It's nasty. Right? So if I look at my last box here, now I have a lot of lines because the other day, check this out. This was so amazing. The other day, here was the ladder. Here was the ladder. Here was the ladder. Went down. But then we formed this rung right in the middle. So it stopped walking up and down the ladder like it went down. So then it kind of changed from, I call it a dry cleaners. Yeah, it's terrible, bro. Like this morning sucks. It's tough. When in doubt, just back out, right? Hey, Charles, I appreciate you, brother. And I'm practicing your style in paper money because, again, I got to get good at it before I drop it, right? So let's think about this. If you're going to use this approach, got to establish a bias. And again, I'm thinking maybe of a bigger time frame too, because that 1 hour seemed to be pretty great, at least on the CAD. Right now, I can't even describe to you what's happened. This is ugly. But my last contraction phase was here. So and then I have this one. So this was from the other day, right? So basically, if I look at, let me just kind of do this. Let me cancel write extension. So as of right now, if I just look at it from purely what's happening is this is a rung. I got a contraction here, contraction here. So anywhere in here with this type of approach would be a good area to accumulate. Again, accumulate positions is a whole different approach. 5 minutes might be too fast. Forex, I'm using the hourly because the hourly it's money. But again, same philosophy. We're trending up. These were my boxes. If I'm going to accumulate inventory, again, accumulate inventory, it's going to be down here as close to that line as possible. Now, I understand we're in a squeeze, but I can't see any sideways action. This looks like bear flags and I don't know. It's just, it's too tough for me. If it starts to do this, then I can get a better idea of what's going on. But as of right now, I won't start building positions until somewhere in that area, as long as we're still trending up. But I haven't practiced on the 5 minutes, but what I do know is the hourly time frame. Just look at that chart and memorize that chart. This is like the perfect. Okay? So one of the things that I do want to say is we're going to be talking about I'm going to be doing a lot of stuff over the next months. We're going to be talking about the boxes, the expansion lines. We're going to talk about concepts called liquidity lines. We're going to be talking about, multi-leg expansions, price settling patterns, the trend pattern, how to define a range, walking up and down the ladder, like a lot of stuff, okay? How to manage risk. I'm going to give you guys strategies. I mean, a lot. So this ain't no one, we're good. Hey, one class, we're golden. This is a concept that I'm going to be utilizing in my crypto trading, Forex for sure, even on the futures, but I'm just thinking maybe a higher time frame. Charles, has got the 3 minute, the 5 minute. That's a shorter time frame. I'm talking about more of a longer term, build up the position, build 3 or 4 or 5 contracts at a discount and sell them all back, right? You might get one move, one setup, 2 setups a week. But if you're accumulating positions, you can make a lot of money. But I am going to look at it in the 5 minute because I'm experimenting. But, look at that chart. You know exactly what to do. I know exactly what I'm going to do here too. We're ugly. But regardless, I would love to see it get some type of action so I can actually draw a box. But as of right now, I'm looking for down here. Now, you want to take the concept of supply and demand. Check this out. Just really quickly. Supply and demand's on all time frames, just so you know. Aggressive buying and aggressive selling. Look at this candle. 1, 2, 3, 4, 5, 6. This is a demand zone. Right here is a demand zone, right? Aggressive buying, aggressive selling, which I'm going to talk about that because one of the things that you could do to start building a position is not only down here, look for a divergence, but maybe at a demand zone. Because see, the most important thing I like about this is I don't have to call the exact bottom. That's very hard, man. I like the idea of building into a position. Bro, you can even do these with SPY put calls, right? I don't want to buy calls, but guess what? Couldn't you start? This takes buying call options to a whole different level. You can buy a call option here, goes up, comes back, accumulate another call option. So you can actually accumulate multiple call options. And then if it does walk the ladder and keeps going up, which we expect it to do, because remember, the market, look, how does everybody, including me, and this is the last thing I'm going to say because I want to just leave all this out and let you know that you keep coming back to class, you're going to get your mind blown. Yeah, you can do that too. Absolutely. Just, again, understand your risk, right? Because, those things move pretty quick. Yeah, the tax benefits, but boy, it's tough, man. They move quick. So, again, understand your own thing. But how does everybody draw an uptrend? And I'm going to leave it at this. Higher highs and higher lows, right? That's everybody on the internet, including me. Somebody tell me in chat, does it really look that beautiful? That's the textbook definition. Higher high, but come on. Does it really look like that? Or does it look like this? Isn't that how it really looks? Does it ever really look like that? No. No, it doesn't. Here's the thing, guys. The reality is this. The market moves in waves. Not straight lines. Not straight lines. Waves. And the waves pick off retail people. Squeeze. Squeeze. Undervalue, right? You can go whatever, squeeze. But my point is, this is how the reality of the situation is. Look at that. Was that higher highs and higher lows? Come on. But look, it doesn't matter. It's up. Institutions are taking it up. But this chart over here sure as heck doesn't look like this. It's stop out, everybody. Stop out, everybody. The trend is up. So the whole methodology behind this philosophy, which I'm going to be going deep probably for the next year, because I know these people, I've known them for a long time. I know they're institutional traders. And the mission is to teach retail traders how to think like an institution, how to trade like an institution without having institutional money. So the methodology that I'm going to talk about, if you keep coming back to class, it's going to get you to look at things probably different than you ever did, because it's different than I've ever looked at it. And I'm always open to improving and getting better and learning. We're going to accumulate inventory at discounts, and we're going to sell back to the retail in line with the bigger trend. That's all I got to say today, my friends. Thanks for being here. I'm going to be trading, well, as of right now, I can't even trade nothing. Unless that damn orange line drops down, and the way the market's moving right now, I don't really want to trade anything. But if the market starts to give me some type of chop in action, then I'm going to draw my box, and then I'm going to draw my middle line. And as long as we keep going up, I'm going to be accumulating in zones. And I'm going to be selling. When it breaks out of the zone and comes back up, I'm going to be selling. And I'm going to do it all over again. Walking up and down the ladder. And then when this switch is bearish, guess what? Now we're going to we're going to walk down the ladder. This is so money. It's like that movie where and I know Jason knows it. You're so money, you don't even know. This is so money, and we don't even know. And I know based on these institutional traders. And it makes a lot of sense. Swingers, exactly. Hey, thanks for being here, everybody. I hope you found value in this.
All right, everybody. Wow, that was packed. If you are still watching right now, I'm sure you got some nuggets, okay? We do this every day. That's what I do. Monday, Tuesday, Wednesday, and Thursday, I do my Options Elite Masterclass, where we actually also talk about Forex as well as crypto. So if you're interested in more information on that, check down below. You'll see my Options Elite Master course. If you get that course, you'll have an opportunity to sign up with the coaching. And like I said in the beginning, the indicator that I used in the beginning of the video, right now only, if you get my Options Elite Master course, I'm going to give you that indicator for free. So it goes with my course. You will get that indicator for free, or you can just check down below and get information on the indicator by itself and any of the other indicators that I use and some of the bonuses that I offer if you get those indicators through me. All right, everybody. We'll see you next time with another video lesson where we'll probably continue this discussion because I got a lot of good stuff to show you. All right, until next time, Jeff Moore, author of the book Trading Part-Time, CEO, lead instructor of the Options Elite University, and I'll see you in the next video lesson.